Hello traders, and welcome to the fourth video within the second section of the IPDATrader Private Mentorship. And as you can see in the title, we're still going to be talking about points of interest, mainly because there's still some key elements and information that I want to share with you regarding points of interest, even though you already should have a pretty good understanding of points of interest, right? So let me actually start by doing a quick summary of what you should already know at this point, right? You should be able at this point to identify points of interest. You should be able to know why they happen, what they mean in regards to smart money and algorithmic delivery, and what we look for, right? You should essentially be able to answer those 4 questions. If you're not able to do so, you should go back to previous videos and keep studying. So what are we going to be discussing today, guys? It's pretty straightforward. I'm still going to be giving you more information regarding points of interest, more specifically about high volume mitigations, right? That's a topic of discussion today, high volume mitigations. I'm also going to be giving you some rules for POI selections that is really going to help you and sort of shorten your process in regards to deciding what POI is valid or which one is not. And it's really going to eliminate a lot of potential POIs that you may be looking for that are no longer going to have any relevance for you. So that's that. And we're also going to be looking at mitigation plays. Those are the 3 different topics for today. And really, let's actually get started with high volume mitigations. It's pretty easy to understand. So let's dive right into that. So what do we mean by high volume mitigations? Well, let me actually draw a market. We can have a market that is potentially pushing down. You get something like this and like this. Cool. You should very well and easy understand that, hey, I have a point of interest over here and I may want to refine it to some area in here. Okay, so what I want you to pay attention here is the following, right? You may be waiting for this point of interest to get hit to potentially confirm this area to take buys, right? That's something that could be very well happening within your brain, and you may be probably thinking something along those lines. Well, what I want you to keep in mind in regards to this topic is that if you are getting that mitigation, right? If price is mitigating your point of interest at any high volume time, that's going to be a great confluence, because what do we know about high volume times? Well, there's going to be a lot of movement, and if you're actually reading price correctly, then you're probably going to be in the right side of the market and you're going to have a phenomenal trade, right? So what are those key times, right? And I trust you guys enough to go and figure out what time is that particular session in your country or city, right? So you want to pay attention to London Open, New York Open, New York Stock Exchange Open, London Close. What else do we have? We also have Asia Open. And that's pretty much it, right? If you are seeing a mitigation occurring during any of these periods of time, you can expect that that mitigation is actually higher probability because we are mitigating that block at a high volume time. There's not much to it. That's essentially in regards to the topic of high volume mitigations. So let's actually move on to the next topic, which is going to be dealing about some rules about your POI selection. And this is going to be pretty straightforward, and this was explained in my YouTube video. However, you want to really be paying attention to those rules. So let me actually draw a market. Let's say we have a market like this. Maybe creating liquidity over here, move up, move down, just like this, right? And you're waiting for a POI over here. Maybe you see an FU candle with that big wick over here, and you're waiting for this particular POI. Cool. The rule I'm going to give you here for your POI selection is the following, right? One rule is you want liquidity being grabbed into your point of interest. That's going to turn your point of interest into a stronger point of interest with higher probability. You want to trade as close to the origin as possible. You want to take POIs above / below the 61% fib retracement, and that's directly correlated to discount pricing and how really smart money behaves in terms of when they look for buys and when they look for sales, right? So explaining those 3 rules over here, it's pretty straightforward and simple, right? You want some sort of liquidity type being grabbed into your point of interest, and you're going to be learning about liquidity in the next section, so do not worry. For now, keep that rule in mind, right? You also want to take the trade as close to the origin as possible, which is directly correlated with the 3rd rule, which is only POIs above below the 61% retracement, which is correlated with the discount pricing, right? That means that if you have a POI over here, for example, right, and that POI means that price is still below the 61% retracement. If you're accounting this as the high and this as the low, you don't want to trade that POI or even look at that POI at all, right? Because you want to be buying or selling as cheap as possible, right? If you're trying to sell this market, well, you're going to wait for that 61% plus retracement, because that means that price is really moving into discount prices, and at any time we could start heading the other direction if order flow is essentially still bearish, which this particular fractal structure really shows. So as long as you're above, in this case above the 61% in terms of your POI selection, you're good with this rule. And we're going to be jumping into the charts and explaining this a little bit in more detail, but for now keep that idea in mind, right? And really the origin, and what I really call the origin, is this section over here. This is a origin, those 2 sections, right? If you want to be buying, you want to be buying as close to the origin as possible. Again, that's really related to discount pricing, which is an essential aspect of the algorithm. It really looks into that, and you want to be playing with that and not against that. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, IPDATrader. IPDATrader is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to IPDATrader for sponsoring this video, and now into today's lesson. Enjoy the video. So we can clearly see in this case that if I wanted to sell this market, I would wait for price to come above the 61%, and I would look for POIs inside this region, right? I may have 2 or 3 that I'm watching, and that's absolutely fine, as long as those POIs have liquidity being grabbed into them, are above, in this case, because we're selling the 61% retracement. Those are going to be great POIs to try and confirm within a lower time frame, which you're going to learn about in future sections. So that's that. That's really the technical explanation for that, for the rules for valid POIs, and we're really going to be taking a look now into the charts to explain it in a little bit more detail. So guys, we're on the charts and let's get started, right? As we said, we're going to be discussing some rules regarding POI selection, and let's actually look at this chart right here, right? As you can see, I've got this POI selected. Reason being is because we do have Well, we had liquidity sitting above it, trendline liquidity. Do not worry, liquidity is something you will learn about very soon. But essentially, we had liquidity being grabbed into our point of interest. If we take the fib and fib it from the bottom to the top, we can see this POI is well below the 62%, right? Any POI that would be above this particular price point would not be valid, right? Meaning that if you're still looking at this structural play, right? And again, refer back to structure if you're confused. This is where we start to put the ideas together. We can understand that this is external structure over here, right? External. Let me grab this tool another time, and external, right? We understand that. We can sort of have an expectation of a market structure like this, right? If we follow price, we can see that we made a high over here, right? Let me actually draw it a bit better. We made a high, we came back, made a low, the external point, we made a new high over here, and all I'm thinking about is, well, we're potentially retracing, we're coming back to the origin, right? This is where the origin block comes into play, and expectation could be something like this, right? That doesn't mean that I'm not going to be partial in on the way up, or that I'm going to be expecting some sort of new highs happening today, right? It's really not the point here. We're still going to be discussing POIs, right? I know, and again, I know that the internal structure is absolutely bearish, right? If you follow the candlestick structure over here, you can clearly identify that we are absolutely bearish internally, which means that any POIs inside these areas, right, that represent some sort of up move before down moves that make new lows are still going to be valid points for sales, right? However, if I'm looking at this particular fractal over here, and let me actually get rid of some stuff, I should understand that, hey, this right here is a pretty clean point of interest that I may want to be watching as price trades into that, right? Let me remove more stuff over here. So why is this a valid POI and something that I would look up for, right? Essentially, let's repeat that. We have liquidity being grabbed into our point of interest, right? We also have a shallow liquidity over here, but that's again another topic. And we are below the 62.1%, 0.62% retracement, right? Grabbing the fib tool, you should be able to do that. And again, here are my settings for the fib in case you want to copy them. They're really standard. I just removed every other value that was not the 62.5 and 0.79. Those are really the fib levels you really want to pay attention to. And we're hitting a origin, right? This doesn't mean that you're sort of obligated to only trade origin blocks. No, it's just another POI example, right? And this is a high probability. Again, there is a very high probability we're going to get some mitigation play, whether that comes back up here and then drops and continues lower. That's fine. There's still some room to make money on the buys up, right? You do not have to always expect somehow the huge move away from your zone, right? It will happen, absolutely will happen, but you don't have to always be expecting that. So that is a example of an absolute valid point of interest that you could potentially watch out for. However, this right here on its own, right? This down candle over here, specifically this IFC, you could refine it potentially to the wick down. This could have been a valid point of interest to watch out for as well, right? We can see if we drag it across, we have some little mitigation, but we continue lower. That's absolutely fine. And as you can see, I have this entire origin as a point of interest. And I know that if I zoom into lower time frames, I should be able to see some sort of imbalance being filled into my point of interest. And I know that we still have this sort of IFC structure, right? Pretty cleanly. We can see it over here. And that may want to get tapped before we move up. So that means that I'm still going to be very cautious about executing buys over here, right? Even though if we look into lower time frames, we can start to see that we're potentially starting to shift structure over here, right? We broke about this structure point, and now we may be returning over here or potentially over here to then potentially continue up, right? But again, that's going to be well explained within the within the confirmation section. So far, we're still discussing points of interest. So that is a valid point of interest, and really all I'm doing is applying the rules I just gave you about your points of interest, which is if you're buying, you want to be buying below this 6.2%. You want to be buying as close to the origin as possible, and you want liquidity being grabbed into your point of interest. Another reason on why this POI is particularly powerful is because looking at this candle movement, this is probably an FU candle on a sort of higher time frame, right? Maybe a weekly, or I don't really know. I'm not going to be trying to catch it. Oh, there we go. You can see that the weekly time frame is clearly an FU candle void, and we're hitting that. So the probability of getting mitigation plays away from the zone is pretty high, right? We can also see, if we go back to the 8-hour, that this order block previously mitigated another order block, which means that this is actually a last point of true mitigation over here, last point of true mitigation, or order block 2.0, right? Whatever you want to call it. Let's actually use both in this case. Reason being is because we can see that we had an order block over here, right? This actually made a new high in relation to this one right here. We actually came back down, we mitigated this block, and then we moved higher. So I know that there is potential interest. Oh my God, sorry for that. I know that there is potential interest sitting in this POI that I may want to watch out for, right? And I can also see that we have imbalances on the way down, so this may want to be filled into this particular FU candle void. That's why I'm being patient and not rushing into trades as price is within our point of interest, right? So that's really that in regards to the rules. Let's actually go back to the drawing board and let me talk about the last topic of this video, which are the different mitigations play. Because as you get more experience and as you go through the charts, you will pretty much see that every mitigation play is pretty much unique, right? There's no really two equal or same mitigations that you can just say, oh, okay, this happened exactly the same way 2 weeks ago. No, they're going to have variables, but we're going to be diving right into the mitigations play within the drawing board. So we're back over here, and let's now talk about mitigation plays, right? And this is something that is actually important. So let's get started. Well, let's imagine we have a market that is pushing up. Once again, break, point of interest left behind over here, retracement, and I want you to pay attention here, right? There's multiple ways price can mitigate a point of interest, one of them being and what I call the very liquid point of interest, and that means that the market has actually grabbed liquidity on the way up, whether that be because we sort of created maybe some resistance and we spiked through it and we hit the point of interest, or because we potentially had a trendline liquidity over here that we took away while trading into a point of interest. Just at the end of the day, if you have a very liquid reaction, right? Very liquid mitigation. This means that price didn't spend any time in your point of interest and it just happened to hit it and move straight lower, right? There's really no way you can execute on those mitigations unless you're using sell limits at those areas, right? And this is going to happen, guys. You may be waiting for a point of interest for 1 hour for it just to get hit and completely melt, and you miss the trade unless you're actually placing sell limits. So be aware of that, right? This is a type of mitigation that is called a liquid mitigation, where the POI itself is very liquid, so they do not have the need to actually engineer the liquidity over here, and they just hit it, close positions, and move lower. That's there in regards to liquid mitigations, and I will show them to you in the charts. They do happen, but the most common one is the non-liquid POI, which means that price is going to be playing in and around your point of interest for a little, right? Potentially something like this, maybe creating liquidity inside your point of interest, then quickly grabbing it, right, and then breaking structure, but then hitting this block and making a new high and then dropping, right? You need to be careful. A 1 minute break in market structure, if you're watching a 3 hour POI, is not always going to be the best confirmation. However, what I want you to understand here is that sometimes price will reach into your POI and it will take its time over here, right? It's not going to be an instant drop as you hit it, as with the liquid POIs. No, it's going to take its time. It may actually engineer some liquidity over here, right? Or it may actually create a pattern that you can recognize and then say to yourself, okay, with probability we're now heading lower. I want to be targeting this low, so I want to be taking sells in a OB 2.0 that may have been left behind unmitigated over here with imbalances on the way up, and I want to be taking that down. So that is it in regards to non-liquid and very liquid POIs. Those are really the only two mitigation plays you will have. Either it's going to instantly reject it, or we're going to be playing in and around the POI for a bit, maybe potentially creating liquidity, or maybe it's just the market really taking its time to close those positions out to then continue lower. So I don't want to make this video too long. We've already been we've really been talking about POIs for a really large amount of minutes. So let me get back into the charts and let's actually try to spot those, right? Let me look for a very liquid POI and a non-liquid one. Again, this could very well be a very liquid POI, right? We can see that we have this IFC structure over here, right there. We also have the imbalance, which is a nice confluence to have, right? The distance between the wicks where only buy side is offered. This is going to eventually get filled and the market is going to be offering sell side at this particular price point because that's how really the markets work and they need to be balanced out. So we can see we hit the POI and we instantly move up right there. Again, if you go lower time frames, you could potentially catch an entry, but I don't think I can go that far back in time. I'm afraid I may not be able to do that, or I am. And as you can see, I mean, price plays in a little, but if we look at the POI time frame itself, you can see that we just hit it and boom, we move away aggressively. And those are POI mitigations that you may miss depending on what you really do as and what you really use as execution and triggers. So let's now look for a non-liquid POI, right? And again, this right here is a also very liquid POI right here. This one, the one that we're using for the last point of true mitigation. We can see that we barely touched it with a wick right here, and we move aggressively away, and that's going to leave behind a new point of interest. So you should really understand that points of interest are being created back and forth within the market, right? There's always going to be point of interest because the market is always buying and selling, creating up moves before down moves and down moves before up moves, because that's how the markets actually move. So let me try and spot a non-liquid POI reaction, right? Let's go back in time and let's try to find one. Let's see what we find. Oh, this could be an okay example. Absolutely. So we have this POI. Again, don't really think about the structure story over here because this may have actually looked bearish at the time. But we see that we have a POI, we see that we trade into it, and we see that we slowly move away, right? We actually take our time. We potentially shift structure on a lower time frame, return to the origin of that smaller time frame, and then move higher. That's how you really need to think about the markets in that fractal nature. We go to a 2 hour, let's see. Go to a 2 hour, that's not the POI, it was this one right here. We can see how really slow and steady we move away, but there's not much of a liquid reaction happening over here, okay? So keep that in mind. Let's actually go ahead and try to spot a mitigation, potentially a liquid one that happened during a high volume time. Like this one right here, right? Just as an example, this happened right at London Open. This is not some sort of luck or coincidence, right? you can see that we hit this POI at 8 a.m. in the morning, which for me is London Open. We hit the POI and we aggressively move away. Why? Because we are hitting the POI at a high volume time, and during those periods of time is where you get those big candles, and those are really the times you want to be really watching the charts, right? And you can see how aggressively and great this mitigation actually works. So that's pretty much it, guys. There's not much more to POIs at this point. You should be pretty much an expert in identifying them, really choosing the right ones, right? Again, do not get confused with the multiple time frames. Just use whatever is essentially significant for you, right? So potentially you could be waiting for, if you're looking at this structure play over here, right? If you're saying to yourself, internally we are absolutely bearish, which is correct, you could be potentially expecting a return here to then continue selling. That could very well happen, right? And you would have your FIP over here, and you would wait for that 62% or above to hit, and then you would look for your POIs and mitigation plays. So that should really sum it all up in regards to points of interest. However, if you do still find it difficult, if you need extra guidance, do not hesitate to message me on Discord. I will get back to you as soon as possible. You should really be exploiting your time in the community. Ask people, send charts, send analysis, message me, ask questions. And for now, that's going to be everything for this particular section, and we shall continue with the section number 3.